I actually conduct online lessons. Okay, I conduct online lessons for various accounting subjects. We have cost. I do cost accounting, management accounting, financial accounting. I also do financial reporting, and I also do Excel and Pastel lessons. Our lessons are very affordable and they are always recorded. So if you're interested in joining us, you can just holler at me and you be able to join my class. Okay, so I recently sent out a poll in my WhatsApp group. Okay, I recently set up a poll for people to vote, and there were a number of topics, about four. There was understanding the income statement, understanding the balance sheet, understanding the basically changes in equity, and also variance analysis in management accounting or cost accounting. So the topic that actually won is changes in equity. So here we are. We'll get to learn changes in equity together. We'll get to understand changes in equity together. Okay. So there's something I always say every single time I'm about to face a certain topic in accounting, which subject, doesn't matter which topic, every single time I'm about to face a certain something in accounting, I come with knowledge already from the foundation. Okay, which is the financial elements. I might make a video on the financial elements and post it on YouTube. I'm not sure when, but I will, and then I'll post it. So this, for us to very well understand changes in equity, we have to make sure we have the knowledge of the financials already. Okay, at least we have to be in a position where we understand the basics of financial accounting. Okay, so this will just be the part one version of changes in equity. I'll post another one, but this will be basically the introduction. I don't want to make the video long. I want to make it pretty short, okay, and pretty understandable, very easy to understand. That's the objective of today. That's the goal, so that at least when you guys watch and you understand, then boom, your studies will actually be in a very you practically be in a very good position in terms of your financial accounting knowledge. Okay, so kindly subscribe to the channel, share, and inbox if you'd like to join our classes. All right, let's look at changes of equity. So before we actually talk about changes in equity, okay, before we actually talk about changes in equity, we need to understand what equity is. What is equity? We need to be in a position where we actually understand what equity is. So what is equity? Okay, so when you talk about equity, firstly, let me give you an example so that that example gives you a very good breakdown of what equity is. Here's the example. Imagine this. You run a business, or probably you own some shares in a company. You are a shareholder, right? You are a shareholder in the company. The company probably has, a statement of financial position with some assets, some liabilities or debts, and there's got the equity components, which is your shares, okay, which is your shares and a bit of some retained earnings from last year. So equity is basically the part of the business that you own, okay. So basically, if we talk about equity, we can look at equity in terms of ownership value. So the other word we can use for equity is capital. Okay, the other word we can use for equity is capital. But when we talk about equity, we are basically looking at the ownership value of the business. Okay, the value that the owner actually owns in that particular business. That's what equity is. So equity actually shows how much of the business belongs to the owner after all the debts are paid. Let me repeat that sentence, okay? I don't know if you're writing down, okay, but make sure you pay close attention. Equity shows us how much of the business belongs to the owner after all the debts have been paid. I don't know if you remember your accounting equation very well, but let me explain to you a little something. Okay, when in our balance sheet, how the balance sheet is a replica of the accounting equation. Okay, I'll probably make a video on this as well. The more you like, the more you subscribe, the more I'll be motivated to make them. Okay, so do as wise, share with your friends. Okay, the accounting equation. So you know how the balance sheet is a replica of the accounting equation. So basically, when it comes to us calculating equity, we use the accounting equation. The accounting equation is assets is equals to liabilities plus equity, or basically capital. So if you want to calculate equity, it will be equity is equals to, what are we going to subtract? Yes, we subtract our assets. We subtract our assets and our liabilities. Basically, we are taking away all our liabilities from our assets. Then we'll have what we call equity. Okay? So, equity is in two types. Okay? We have share capital. That's if we look at it from the balance sheet point of view. Examples, we can talk about share capital. Well, let me say examples rather, not types. Examples of equity. Examples of equity, we can talk about things like share capital and retained earnings. We can talk about share capital and retained earnings. So, see. There's something that I always tell my students: love the subject. I bet you can tell from the way I'm talking to you right now that I seriously love what I'm doing. Okay? All right, let me explain. Let me break this down. If you were to look at a balance sheet, if you were to look at a balance sheet and you go to the liabilities and equity part of the balance sheet, at the bottom part, okay, you find under equity there's usually probably share capital or retained earnings. Okay, these are basically examples of equity, or basically elements that will affect our equity. Okay, what is share capital? Share capital is the ownership value, or the part the owners actually own in the business. You get it, right? For example, we can talk about ordinary shares, preference shares. Okay, all those are examples of share capital. Okay, the part or the portion of the business that the owner actually has a right on, the part of the business that the owner owns the business. What about retained earnings? Imagine we are currently in 2025. Today's date is 16th March 2025. We've started a new year, which is more like a new finance period, a new financial year. Last year, we made a profit. Let's say last year we made a profit of 20,000 kwacha. Okay? Instead of paying it all out or sharing it amongst the shareholders, or I don't know, any other business owners, we decide to reinvest this profit back in the business to try and increase our business value, to try and improve our business's financial position. If we were to bring it back, it will come back in our business as a retained earning. Okay? The 20,000 kwacha will be retained earnings. So, what is retained earnings? Retained earnings, these are proceeds or profits that you made in the previous year that you've decided to bring in the current year. Every time you make a profit, it increases your retained earnings for the following year, unless you decide to pay them off or share them among your shareholders. Okay. So now that we understand what equity is and we understand how we can calculate our equity, that's by subtracting assets and liabilities. And we understand the two examples of equity, that's share capital and retained earnings. We might have some more, but these are the main ones. Now let's see if we can understand what changes in equity means. Okay, let's understand what changes in equity means. Let's get to understand what changes in equity. What is changes in equity? Okay, so here we are basically looking at the movement. And see, a simple way, movement. We know what equity is. So if we say changes in equity, we are looking at the movement in equity. We are basically comparing our opening equity balances with our closing equity balances. But for us to actually find our closing equity balances, we'll have to monitor the movements between our opening and our closing. We'll have to monitor the differences. I'll give you an example. Let's say, for instance, a rough example, okay? Okay, before we get to an example, what causes these changes, okay? What let's define the statement of changes in equity as a financial report that shows the movement, which we can say is the changes in the owner's equity over a specific period of time, usually a year. So basically, it will explain to us how the equity increased or decreased due to factors, different factors. So which factors can actually cause for our equity to decrease or for our equity to increase? Number one, we can talk about profit or loss. Yeah, I know. When I say profit or loss, you probably think about an income statement. You're correct. The statement of financial performance. That's very, very correct. So if the business makes a profit, equity increases. If a business makes a loss, equity decreases. You remember when I was talking to you about the retained earnings? This is where it comes from. Okay, this is the source. When a business makes a profit, the retained earnings increase. When a business makes a loss, the retained earnings reduce. Equity is actually credited. Okay, so if a business makes a loss, that's a special expense. It will be debited in the retained earnings account, thus reducing the total value of the retained earnings. If you want to know more details about your T accounts, how to do your double entry and any of that foundation of accounting stuff, you can inbox me so as to join my classes. Okay, I actually teach all that. All right, perfect. So that's how a profit and loss statement actually affects our changes in equity statement. So we can also talk about ownership investments. We can also talk about ownership investments. What do I mean? We are looking at capital introduced when the owner of a business decides to put in more money in their business. If they put in more money, if the owner puts more money into the business, the equity increases because their share capital actually increases. Okay? Or we can talk about things like other gains or losses. Other gains, we can talk about revaluations. What if we revalue our assets and then we have a revaluation gain? Definitely to increase it will increase our assets. What if we have a foreign exchange gain? It will definitely increase our asset. Okay? All right, perfect. Now let's look at an example of a simple set of transactions and how we can account for it in the statement of changes in equity. Okay, so let's imagine this. Imagine a business starts initially with capital of about 20,000 kwacha. A business starts initially with capital of about 20,000 kwacha. Then the owner invests an extra 5,000 kwacha. And then later on, the business makes a profit of 10,000 kwacha. Okay? And then the owner withdraws. The owner withdraws 3,000 kwacha. How are we going to represent all this in our changes in equity? Okay, if I were you, I would pause this video and try to solve it myself, and then play it later on to see if I'm correct. So what we are going to do today or right now will be a simple thing. Okay, usually if it's a full question, we'll have to separate the share capital, we'll have to separate the retained earnings, the revaluations, and everything else. Okay, but right now I'm just going to make a simple thing, like just one column. Okay, yeah, so that we just understand it. So here we have initial capital. We have initial capital of 20,000 kwacha. Perfect, great. Okay, we have initial capital of 20,000 kwacha. That's our initial capital. And then we invest 5,000 kwacha to definitely increase our equity. And then, so basically our opening equity is 20,000 kwacha. That's our initial capital. Then our investment is 5,000 kwacha. And then we make a profit of 10,000 kwacha. This will also increase our equity on the retained earnings. Then we have a cash drawing of 3,000. This will reduce our equity. Okay, it's reducing our business value. Okay, it's more like we are taking away capital from our business. Okay, so now our closing total equity value will be 32,000. I just said closing equity value. Okay, so like I said, this is just a part one. Okay, this is a part one to 2 sets of videos that I'm supposed to make. Okay, so in this one, I was just breaking down what equity is, what it means, and what you're supposed to understand, and the treatment of certain figures. But in our next video, the one that we are going to post, I am going to solve a full question on changes of equity. So right now, make sure you understand the theory, practice a bit of some questions similar to this one, okay? Try to understand what capital means, investments, profit or drawings, and how exchanges of inequity or movement in our capital value can be affected, okay? All right. And also for more of financial accounting, cost accounting, management accounting, financial reporting, Pastel or Excel, you can simply inbox me. Okay. I'll drop a number that you can call. I'll add you to my WhatsApp group. And then after you register, you'll be able to join my class and be able to actually learn all this and even more. Okay. So subscribe to this channel. Watch out for the next video. Thank you very much for watching. My name is Ronald Kashweka. See you next time.